Over the past few days, we've had a lot of conversations with investors who are understandably asking the same question. What do recent events actually mean for Dubai property? And when headlines start using words like uncertainty or risk, it's completely natural to feel cautious. So today, we want to slow things down and look at the market to see what it's actually doing, not what it feels like it might be doing. When uncertainty rises anywhere in the world, headlines tend to move faster than facts. And that can make markets feel more dramatic than they really are. So before looking at the numbers, it helps to ask a simple question. What would a real property crash actually look like? You would normally see transactions stop, buyers disappear, and sellers lowering prices just to exit. So the question right now isn't how the news sounds, it's whether those things are actually happening. Let's look at the verified data. According to Dubai Land Department, figures from January 2026 recorded more than 22,000 property transactions, with total value exceeding 111 billion dirhams. That's one of the strongest starts to a year that Dubai has ever seen. And even in the most recent reported week, over 4,400 properties were sold, representing more than 43 billion dirhams in activity. Those numbers tell us something important. People are still participating in the market. At Dubai Property Advisors, our role isn't to predict headlines. It's simply to help investors understand what the data is quietly showing. Many people have asked whether transactions stopped following recent events. Official weekend figures haven't been released yet, which is normal. But early reporting suggests buyers are taking a moment to pause and observe rather than stepping away entirely. And that's actually very typical behaviour. Markets often slow briefly while people process new information. To understand Dubai property, we also need to look beyond short-term news. According to Henley and Partners' Wealth Migration Report, thousands of high net worth individuals continue relocating to the UAE each year. Around 6,700 millionaires moved in 2024, with projections of nearly 9,800 in 2025, bringing significant investable capital. While 2026 figures are still developing, broader forecast suggests steady property growth and continued rental demand. In other words, the longer term drivers supporting Dubai haven't changed. It's also important to be balanced. Some analysts expect periods of price stabilization as new supply enters the market. But that reflects a normal market cycle, not necessarily a warning sign. Healthy markets adjust, they don't move in straight lines. We're often asked whether this could become a correction. Corrections are simply markets catching their breath after strong growth. A collapse, on the other hand, involves liquidity disappearing, and that's not what current activity suggests. Right now, what we're seeing looks far more like caution than panic. The reality is that property markets are influenced by many layers at once: global events, regional dynamics, and Dubai's own local fundamentals. Looking at one layer can make the picture seem more dramatic than it really is. So the takeaway today is quite simple. Uncertainty can change how markets feel, but understanding comes from looking at behaviour and data together. And right now, the data shows a market that's adjusting, not stopping. Whether you've invested through us or you're simply trying to understand what's happening, we're here to provide clarity during periods like this.